Okay, I'm recording now. So, guys, if you can look at your screen, what Dave's going to do is go through. This is a made-up break-even analysis for the football club, and yeah, Dave's just going to go through how each bit and how it can affect a business. Why is it used, Dave? Why is break-even used? Do you know?
I guess you use it to make sure that that if you're not breaking even and you're making a loss, then ultimately long term you're not going to be able to sustain the business. So you'll eventually end up running out of cash. So similarly, we have the part of the Premier League and UEFA rules is called break even requirements. So we have to show that we are not making a loss over a 3-year period. So yeah, the reason behind this, I guess, is to make sure that you've got enough cash in the business to be able to pay other clubs, to be able to pay your suppliers, to be able to pay your employees, and ultimately to be able to sort of operate as a football club.
Yeah. So the idea at the break-even point is you're not making a profit and you're not making a loss.
Exactly.
And anything over that point, you're making a profit and therefore able to afford, to pay.
To reinvest it in whatever else you want to do. Yeah, exactly.
So just going through some of the terminology. Do you want to just talk through, because it's going to probably come up as you talk?
I don't mind. I'm happy to do it however you want. Yeah.
Yeah. So you've got your sales section there.
Yep.
If you want to just describe each section.
Yeah, of course. Yeah. So this is an example from the club. So we obviously have a variety of different kind of areas. So our retail store where we sell shirts, our ticket office where we sell tickets to matches, and our hospitality where we sell hospitality packages to fans. The example I've used here is our retail. So all of the shirts that we get that you can buy on our website from Under Armour, all of our kit, all the different things that are available to buy, we set a sales price for each of those. In the example I've got here for a shirt is pretty much what in a normal season we'd sell our shirt for, which would be about £45. So fairly straightforward. If you want to buy a shirt, you give the club £45. That £45 goes into our bank account, and we treat that as revenue or income. So that's income that the club generates for every shirt that we sell. We get £45. So that's your sales price. Obviously, depending on what you're selling, you want to change that. So if you're, as an example, we've got the premium Under Armour kit, which you normally sell for more than £45, and then sort of last season's kit you probably look to sell for less than £45. So you vary the price depending on how much demand there'll be from customers. So from fans, how much do they want it? Sales volume per period, so units. So this is how many of those shirts are we selling. So in this example here, I've said, as an example, for one season, we'd look to try and sell, let's say, 10,000 shirts. So if we did that, we would generate £450,000 of sales. So pretty simple, just 10,000 units. That's the number of shirts you sold. We make £45 for each one, so 450k. Fairly straightforward.
Yeah.
So then to make each shirt, you have what's called variable costs. So obviously, when we get the shirts in from Under Armour, there's a variety of costs attached. The way it works for us is a little bit different in that we just pay Under Armour a set fee. But to make the example a bit better, I've sort of assumed that there's a variety of extra things we have to pay. So let's say, for example, we have to pay Under Armour £5 for each shirt. That's a cost which is associated with each individual shirt. The materials for the shirt, that's another £5. To get each shirt shipped over from America will cost us, let's say, £2 per shirt. To print all the badges, the Premier League badges, the numbers, names, things like that would be another £3 of costs. And then I've just put in another cost of £4 per shirt. So what you have, your variable costs are the costs that are associated with each item that you're selling. So for every shirt, we have a variable cost. If we didn't sell that shirt, then we wouldn't have that cost. Or if we didn't buy that shirt, sorry, from Under Armour to then sell onwards, we wouldn't have that cost to pay, which is why they're called variable.
And then just with that variable, that cost goes up with the number of shirts that you purchase.
Exactly. Yeah. So if we change, let's say we at the moment it's is calculated on how many shirts we're selling, which is 10,000. So let's say we actually wanted to sell £20,000 shirts. The variable cost automatically doubles because we've ordered 10,000 more shirts from Under Armour. So it's cost us 190,000 more to buy those shirts in from Under Armour. So the variable cost of every item varies depending on how many of the items you buy to then sell onwards. In most kind of businesses, the more you buy of something, normally the cheaper it gets. So you can, let's say you're bulk buying something, it would cost you, if you're getting 1,000 items shipped over, that's probably going to cost you pretty similar amount to if you're getting 500 items shipped over. So with variable costs, normally what you see is the more you buy in to sell onwards, the cheaper the costs become.
Okay.
So now we've got our sale price per shirt and the cost of making each shirt. So we know we're selling it for £45. It costs us £19 to make each shirt. So this creates what's called the margin. So £26. So it's simply 45 minus 19 is your margin. So this is effectively what's the profit that we're making on each individual shirt. So we know we're selling it for £45. It's cost us £19 to make it. We're generating £26 margin or gross margin. That's normally referred to.
I think they sometimes call that the contribution.
Yeah, or contribution. Yeah, exactly. Yeah. So then if you total sales 900,000, total cost 380,000, your total gross margin would be £520,000 in this example. You often see that expressed as a percentage. And that's what this percentage is here. So what you say there, your gross profit margin percentage is 58%, which is your £26 divided by the 45. So yeah, that's your margin. So a lot of particularly kind of manufacturing businesses, and similar to shirts, to a sort of retail business like our mega store, gross margin is really important because that's the number that really shows you how much you're generating from every single item that you sell, and that's a really key number in particular for your big shops, supermarkets. They really focus on gross margin massively. Is that all making sense? All okay? Yeah.
Yeah, that makes sense.
Yeah. Cool. So then below that, you've got what's called your fixed costs. So these are costs that you're going to incur whether or not you buy the shirts to sell onwards. So the variable costs, they only get incurred by the business or by the club if we buy the shirts to sell. These costs here, we're going to have to pay for whatever. So we know we're going to have to pay them. So that means that when we set our sales price, we need to make sure that the total profit we get is greater than these fixed costs. So as an example of things that would fall into your fixed costs, so you'd have your salaries. So everyone who you employ to look after the shop, they'll have an annual salary, and they'll be the ones that sell the items. As an example here, so you might have we have an insurance that we pay. So where we've got the stores, we have to pay insurance to be able to cover off things happening inside the stores. We have what's called business rates, which is effectively like your council tax. So we have to pay Southampton City Council to have the West Quay store open. West Quay rent, so we pay the owners of West Quay a rental charge each year to be able to have the store there, and then just other fixed costs. So total fixed cost in this example, £207,000. So we know in the year we're going to have to spend £207,000 whatever. So this helps drive what that sales price is and what the sales volume needs to be in order to make a profit. So total cost, fixed cost, £207,000. That gives us a net profit of £312,000. So that's calculated fairly similarly. So £900,000 total sales minus your total variable cost of £380,000 minus your total fixed costs gives you a net profit of £312,000. And in this example, that would be effectively £312,000 cash coming into the bank account to be reinvested elsewhere, to be used elsewhere, because we know that it's more than all the costs that we've had to pay in order to be able to sell those shirts.
This is a really neat spreadsheet giving you all the formulas in there. Or did
Yeah,
you
it's pretty handy. Yeah,
that's great.
not too bad. So that's kind of, it's pretty simple: sales, variable costs, and fixed costs. Then to look at kind of break even specifically. So as Anne-Marie said earlier, that's the point at which you go from not making a loss to making a profit effectively. So where are you making nothing at all? And in this example, the answer would be once you've sold 7,977 shirts. The kind of best way to illustrate that is in this table below. So because we know we've got £207,000 of fixed costs, they stay static throughout. And the variable costs are the ones that vary depending on how many shirts we're selling. So in this column here, if we didn't sell any shirts whatsoever, we know we'd have £207,000 of fixed costs, so we'd be making a loss of £207,000. If we were able to sell 2,000 shirts at £45 each, that would generate sales of £90,000. We've still got a fixed cost of 207, and the variable costs of those shirts, the 2,000 shirts, would be £38,000, which again would give us a loss of 155,000. That obviously goes upwards until you get from 6,000 shirts, you've got a loss of £51,000, and 8,000 shirts, you've got a very small profit of £600. So we know at some point between here, where it's gone from a loss to the profit, must be our break-even point, where we're not making any profit whatsoever. And as it turns out, it's 7,977 shirts is the point at which you don't make any money at all. And then obviously, as you sell more and more shirts at £45 each, you make more and more profit because your fixed costs are staying the same.
That's cool. Just let me ask these guys a few questions.
Yeah, of course.
So what we're aiming here to do is to be able to analyse how a company like the football club will stay in a profit. What could affect the club negatively and make them go at a loss in this instant? What? So increased costs, for example. West Key might charge more. What else?
So we kind of using all of these rates to make dance.
Yeah. So what other things could happen to make make a loss?
Living wage has to increase.
The living wages could it have to increase? Their insurance could go up. What are the good things that this shows us in planning, using it as a planning document?
It makes it safer.
Makes it safer. But what is it showing us about the top that we're selling?
It's probably making a good profit.
Yeah. What about the cost of the top?
It's cheap, but it's more the gross coming. No, it's more than that fixed cost there.
Yeah, but what does it tell us about the price of the shirt? Not necessarily.
It's driven by the fixed cost.
Pardon? It's high, or it's £45, wasn't it?
Yeah, 45.
Yeah. 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 So what I'm trying to sort of say is, gives you an indication of what you've got to sell your products at, doesn't it? And it's really good because it's showing you some of the variable costs. Do you think we could change some of those variable costs in any way?
No, I think the variable costs are quite. You could try and find a cheaper supplier.
Could try and find a cheaper supplier. Yeah. Yeah, actually, Dave, I'm not sure whether you're able to answer this question, but I understand that the club has moved from Under Armour to
Hummel.
Hummel.
Yeah.
Is that because of this? Is this asked to reduce some of the costs or not?
Not really. No, it's a combination of things. I think one of the prime drivers is Under Armour they're looking to focus more on different sports. They're much bigger in America. They're looking to really focus on kind of basketball, NFL, and where they're a bit more where they're a bit more mainstream. So that's partly driven that. But it's a good point, and what you were saying, the Hummel costs will be cheaper for us. So we will expect to make more profit from each shirt that we sell through Hummel, which is good news for us.
Yeah.
But yeah, it's not the reason it's happened, but yeah, will be good news.
And can I just ask another question? With COVID and obviously the shop not being able to open in West Key, what have West Key done? Have they done anything to help the club, or anything that's renting the premises?
Yeah, West Key themselves have been, I can't remember what they've actually done. I think they gave us a bit of a holiday on some of our rent that we had to pay, but not a huge amount. But where the retail store qualifies for the government sort of leisure and hospitality and retail relief, we managed to get some rates relief. So the business rates here, this £18,000, we didn't have to pay that for the period when it was shut.
Right.
So yes, we made a saving there. I think we did have a small saving on the rent. So the way our rent works with West Key is we pay a fixed amount each year, and then we also pay like a margin amount. So the more sales we make in a store, the more rent we pay. So obviously we've not had to incur that this year. But yeah, West Key are notoriously quite difficult with things like that.
Yeah.
But yeah,
it's quite a good deal for them, really. Although it means that they've got a certain commitment to make sure that they're getting the visitors in.
Exactly.
Yeah. Okay. So what I just want to get you to think about is what is the, hang on, let me just go back to our spec. So why do you think businesses use this as a means for controlling the budget? Yeah.
I think it makes it safer.
Makes it safer. We can plan.
Plan ahead.
What?
Yeah, it's just a plan, isn't it?
It's a plan. It's a reference. Could, but what are the limitations of this?
Yeah, I guess it's no change.
In society, I mean, like tax and like interest rates go up, it wouldn't necessarily be bad.
Yeah, it can't predict external environment.
Absolutely right. It's not able to predict the unpredictable. So other costs and things might go up. So you might have one idea and one plan, but at least you have got that plan, and you can adjust your calculations accordingly, can't you?
Yeah, that's a really good answer, a really good point there. So I think if you take this year as an example, obviously no one foresaw COVID happening, but with things like this, we have to order a lot of our shirts in advance. So we have to put in the order for what we think we're going to sell sort of back in June, July, August time for the start of the season. Then you've probably seen, a lot of you, kind of what happened with LD Sports and all of that sort of stuff. So we had to change the shirt about a bit. So we've had to massively change what we do in terms of the prices that we sell the shirts at to make sure that we're still profitable this year. And it's really useful. So if you go on the website, you'll see at the moment quite a lot of the shirts are on sale. So you can use this tool to make sure that if you reduce, let's say you reduce the price to £22, which is what they're still on sale for at the moment. In this example, you'd be making a loss, but you can use this to say, well, what price can we bring it down to in a sale for us still to make a profit?
So did you hear that? It's just saying you can bring it down to the sale, because they've got to get rid of them, because they won't want them next year. So you've got to make the money back somehow, even if it is at a discount. It's a bit of a shame, but you can. So businesses will put a sale on. Go on.
They find with Hummel and stuff like that. With Under Armour, obviously, with COVID happened, they had to buy Under Armour and Hummel. With them changing the Hummel and stuff.
So you asking, was it the club that wanted to move to Hummel, or was it Under Armour didn't want us? I think you said. Didn't you say?
Under Armour were more mainstream in America.
They wanted to support basketball and things like that. So it sort of came to a natural end then, did it?
Pretty much, pretty much, sort of, It was slightly earlier, it was supposed to be, but it kind of came to a natural end type thing,
So what happens when they're like, because obviously at the end of the next season, we'll do like last season sales, they'll do like last season sales. How does that include in that first season? Because obviously they can't predict it in the next year, when they haven't sold the stock.
So what he was just saying that
I can only half hear that. Sorry.
So I think we've already sort of said that you can check on here how cheap the shirt can go. So how cheap did you do it? How cheap could we get the shirt? Still
Yeah,
sort of make a profit at 20,000.
Yeah, on here, I think you've been looking at about £29.50 roughly. You've been making a profit of £2,600 if you sold 20,000 shirts.
Yeah. So he's talking about Bournemouth being able to offer a shirt for a cheeky £5.
Yeah.
But I guess at the end you'd rather sell and get rid of the stock, wouldn't you?
Exactly. Yeah. So at the end, so I guess using this, so where the variable costs are what they are, we've already paid for that at the start of the season. So we've already bought them. So that cost, although it's variable in this example, when you're sort of looking ahead, once you've actually paid for it, it's sort of like a fixed cost because you've already paid for it.
Yeah.
So at that point, you just want to sell the shirt for whatever you can to try and get in, to try and recover some sort of cash because you've already paid for it.
Yeah, fair enough. So I bet the last thing is just looking at what could happen. This is a question to you guys. What could happen if they don't manage their costs? If they don't negotiate with Westquay, you know, what could happen? Costs could be too high. They go, bust. They won't be able to pay salaries. People might be made redundant. They have to reschedule. What's the word? Restructure. Yeah, restructure. You know, could things happen to the academy? Would they still be able to afford the academy?
This is the kind of stuff we might go into. Just talk about.
This is the distinction stuff, the consequences of not managing your budget effectively. Dave, I know you mentioned some things in your spreadsheet as well, but I just wondered if there's anything else that you could think of.
Definitely covered it all. So
I mean, also, I was talking to one of the other ladies here over lunch, and we were talking about if the club don't remain in the Premier League.
Yeah, so that obviously that would have quite a big impact. Yeah, if so, what our main kind of revenue stream where we get most of our money from is from the Premier League, from our broadcasting deal. So if you get relegated, that falls away quite significantly. So we have to always budget and plan for that possibility, and then come up with a sort of plan B if that was to happen. Yeah,
but you can't. Yeah, we can't. You can't really make sure you've got enough savings to do that.
Yeah, effectively, yeah.
Okay, has anybody got any other questions about this? I think we've pretty much covered.
No, I think everything's been covered.
Matt, any questions? All right. I think you're done, Dave.
Yeah, you sure?
Yeah, that was awesome. Do you mind if I use this?
Of course not.
It's made up figures in my other classes.
Of course not. Yeah, it's all made up. So feel free to use it how you want. Yeah.
No, it's really great. Thanks ever so much.
No worries at all. Good luck to you all.
Bye.
Bye.
Thank you.